Every government promises the same thing: responsible budgets, long-term stability, a better future. Yet almost every government on Earth is drowning in debt, borrowing more every year. Here's the mystery. Why does no country ever truly escape this cycle? Why do crises change leaders, policies, even currencies, but never the structure of borrowing itself? What if this is ISN de incompetencia? What if governments are locked into a system they didn't fully design and can't exit without collapse? Tonight, we're uncovering the secret agreement not written in a single document, but embedded in financial rules that traps governments in endless borrowing and keeps the global system alive through permanent crises. Setting the stage, the illusion of choice. We're told governments borrow because they overspend, that debt is a moral failure, that discipline would fix everything. But history tells a different story. Modern governments don't borrow because they want to. They borrow because the system requires it. Behind elections and budgets sits a financial architecture built on credit creation, interest payments, and rollover obligations. An architecture that quietly limits what governments can do no matter who's in power. And once a country enters this structure, there's no clean exit. Origins, where the agreement began. The story begins with war. In the late 17th century, European states faced a problem. Wars were too expensive to fund through taxes alone. The solution was revolutionary: borrow from private lenders and institutionalize the debt. The creation of central banks changed everything. Instead of repaying debts, governments learned they could roll them forward. Old bonds were replaced with new ones. Interest was paid, but principal remained. This was the first unspoken agreement. Governments would never fully repay their debt. Creditors would never demand full repayment as long as interest flowed. Debt became permanent. The rise, debt becomes infrastructure by the 20th century. Borrowing wasn't an emergency tool, it was normal governance. World wars proved that debt could reach unimaginable levels without immediate collapse. After World War II, a global system emerged that formalized this reality. Currencies were ranked. Reserve money was established. International lending institutions were created. From this point forward, governments no longer borrowed just to survive crises. They borrowed to function. Budgets assumed deficits. Growth depended on credit. Stability required constant refinancing. The agreement deepened. Debt must always expand, but never fail catastrophically. The breaking point, when repayment becomes impossible. Every system built on promises eventually meets math. As debt grows faster than economic output, repayment becomes theoretical. Governments stop paying down debt and focus entirely on managing it. This is the breaking point, when debt stops being a liability and becomes a condition of survival. Raising interest rates threatens collapse. Cutting spending triggers unrest. Default risks systemic failure. So instead, borrowing continues. Not because it works, but because stopping would be worse. Fallout, who actually pays the fallout, doesn't hit balance sheets first. It hits people. Inflation erodes savings. Public services decline. Taxes rise quietly through higher living costs. Governments survive by shifting the burden forward onto future generations who'd never consented to the deal. Debt doesn't disappear. It moves through time. Failed fixes. Why reform never works. Every generation proposes solutions. Austerity, balanced budgets, fiscal rules. But these fixes ignore the architecture itself. You can't balance budgets in a system that requires continuous borrowing to remain stable. You can't reduce debt without collapsing asset prices, pension systems, and banking balance sheets. Even when debt is reduced, it's replaced by private debt, corporate debt, or household debt. The system always finds a borrower. Modern parallels the pattern today. Look at the world now. Global debt exceeds $300 trillion. Interest payments consume massive portions of national budgets. Central banks intervene routinely to prevent market stress. Every crisis follows the same script. Borrowing expands. Emergency measures become permanent. Normalization never arrives. This isn't failure, it's consistency. The agreement is being honored. The hidden truth. What the agreement really is, there was never a signed contract. The agreement is structural. Governments promise never to default outright. Creditors promise to refinance indefinitely. Central banks promise to intervene when stability is threatened. Citizens absorb the cost through inflation and reduced purchasing power. No one votes on this. No one officially announces it, but everything depends on it. 3 takeaways. What this reveals? First, governments aren't trapped by debt, they're embedded in it. Second, crises don't break the system. They justify expanding it. Third, the endless borrowing cycle exists to preserve the architecture, not prosperity. Warning: the long-term risk. A system that survives every crisis eventually outlives its legitimacy. When borrowing replaces decision-making and time replaces accountability, trust erodes quietly. The danger isn't collapse tomorrow. It's decades of managed decline that feel normal until they don't. Open-ended thought: if no government can exit the borrowing cycle without disaster, is the problem the debt, or the agreement that made debt unavoidable? If you want to understand how power actually flows through money and why history keeps repeating, subscribe to the channel.